Good morning. We are very pleased to welcome you all here to our webinar about COVID-19 and employees working cross-border. Many of us are still not working in the same way as we did in March, and we see today that even that Corona is still out there, we see some countries are opening, and employees who have returned to Denmark or other countries are allowed to return to China and to US. We have several discussions with clients what to do, and one of the key tasks is that we need to have an overview of where has our employees been and where have they lived during COVID-19. So we have this overview and can see what consequences it had. Today we have the agenda, which comes here. Just need to take the next slide. Yes, as you can see here, we have we have a lot of different cases where we start looking at the interaction with Sweden, and then we see on the general population with other countries what is the consequences for tax and social security. And in order to go through this topics, we have Christina and Adam. Christina is taking the tax issues and Adam is handling social security. If you have any questions, then just type it in and we will take it during the session. And we are going to record the session as well, so it's going to be on our internet afterwards. But let us look at the first topics. Adam, employees working in Denmark and living in Sweden, working from home.
Thank you, Richard. So for managing social security for commuters, it's imperative to find out whether the employee is covered by Danish or Swedish social security. Under normal circumstances, if the employee who's living in Sweden works in Sweden, the employee will be covered by Swedish social security if 25% or more of the work is carried out in Sweden. Under special rules governing the Öresund region, there is a bracket of 50%. So you can choose to bring the bracket up to 50%, meaning that the employee would be able to work in Sweden up to 50% while still maintaining a Danish social security. That's under normal circumstances. During the COVID-19 situation, the Danish and Swedish authorities decided to deviate from the rules. That meaning that any change in work pattern which was triggered by the COVID-19 situation will be disregarded. So any change in work pattern triggered by the COVID-19 situation will not cause a change in the social security position. This basically means that the employee is free to carry out work in Sweden as long as it is necessary due to COVID-19. As society and workplaces reopen, the question now rises, which work is actually necessary due to COVID-19? So as an employer, it's important to be able to monitor and to be able to actually track which work in Sweden is due to COVID-19 and which work in Sweden is not due to COVID-19, and perhaps more due to the fact that the employer and employee has found out that it is convenient to work from home. So this distinction is important to track and be able to document. Also, the COVID-19 really triggered and reopened a new avenue to how commuters are managed. And this new avenue basically implies if the employee normally works in Denmark and then takes up work temporarily in Sweden, this can be governed by special rules on posting. And if this is the case, there is actually no bracket as to how much work the employee may carry out in Sweden. However, there's another condition that the work in Sweden must be temporary. So there's a new avenue which may be explored in the way we manage commuters for Social Security. So basic summary, if the employee are governed by a 25% or 50% bracket, find out where does the employee work and which work is actually necessary due to COVID-19, and perhaps explore this new avenue on posting towards managing commuters.
Right. So now we're going to talk a little bit about taxes. As some of you know, there's been special tax rules in regards to COVID-19 managed by a new law post in summer. However, for the commuters between Denmark and Sweden, there's been no special COVID-19 rules. So what I'm going to do now is just go through with you the consequences of having employees living in Sweden and working from Denmark. And let's start out with the ones being covered by the ordinary tax scheme. For those guys, they're going to have a great tax year in 2020. Let's start off with that. So we don't need to feel sorry for them, actually, at all. The good thing about them is if they, within a 3-month period, and when we talk about 3-month period and it's taxation in Denmark, Denmark has a rolling 3-month period. So if some of them has been working from home since March and they've actually been in Sweden, been less in Denmark than 50% within a 3-month period, then we need to prorata their income. So a proportional part based on workdays in Denmark will be taxed in Denmark, and a prorata part based on workdays in Sweden will be taxed in Sweden. The great thing for these people are they're actually most likely going to be taxed with lower tax brackets in Denmark, which is perfect. And then in Sweden, they're going to be taxed with the taxation in Sweden, which you'll get most likely going to be the lower brackets as well. And the Danish income will not affect the progression taxation in Sweden. Consequently, there will be a nice low tax in Sweden, most likely, and depending on everything else they have. And the Danish proportional part of the income, which would have been taxed in Denmark, is no longer going to be taxed in Denmark. So most likely for some of the top bracket income will be taxed in Sweden instead. So those guys, they just have a great time this year, actually. So again, don't feel too sorry about them. However, they need to file a Swedish tax return. They did anyway, and they need to prorata their income, which is new for them because they were used to everything being taxed in Denmark. And you, in payroll, will most likely have only withheld Danish income by using the Nordic trækaftale, Nordic withholding tax agreement, I guess we can translate it to. That taxation can be forwarded on from the Danish authorities to the Swedish authorities. Consequently, they will not suffer any interest penalties in Sweden on any underpayment of tax in Sweden. So that's something we should maybe work around in order to not have them pay interest income on underpayment in Sweden. So for those guys, if they, what I would recommend, maybe that some kind of news is sent out to these people. You know who they are. You know who's living in Sweden and normally being taxed 100% in Denmark. It's great news. So it's a sort of like not too bad communication to share with these guys. Either you can do it yourself in HR or your advisors, whoever they are, can maybe help you with that communication or a joint call. Let's move on to the next slide, please. Thank you. That was the same, more or less same topic, so we don't need to do that one introduction. But we have some Swedes living in Sweden, working in Denmark, who are on the expat tax scheme. For those guys, it's a little bit worse, actually, because they're used to paying the Danish 27% income tax. They will now have a prorata part be taxed in Denmark with that tax rate, and a prorata part be paid in Sweden if they don't fulfill the restaurant rules. Consequently, they might suffer paying a bit more taxes in Sweden on a prorata part of their income than the 27%, actually 33, isn't it? Which they've been paying in Denmark. So for those, it might not be like a super good deal, but a little bit, again, depends on their income and how many workdays they actually had in Sweden. So it might not be too bad, but it might be a little bit worse than the other ones being on the ordinary tax scheme. So again, communication should be sent out to these that they need to set aside maybe money from some extra taxes in Sweden. Again, I would recommend some kind of joint call with these. I'm going to move later on. We're going to talk about the ones who actually have had no work days at all in one particular month. That will be later on in this presentation, because those guys we need to take special attention to. But that's not only for people coming from Sweden, it's also going to be people coming from the rest of the world commuting back to their home country during COVID-19.
Yes, and we have a question here for Adam. The question is, has agreements been made within the EU countries around social security?
No, there hasn't. Not agreements as such. There's been a guideline from the Commission stating that national authorities should go as far as possible in order to accommodate for the COVID-19 situation. And in legal terms, the countries should make agreements in order to have the impact of the 19 COVID situation be as small as possible. We see that countries have entered into bilateral agreements. In general, they state that COVID-19 related work or changes in work pattern should be disregarded when managing Social Security. So a general trend is that we see the COVID-19 does not impact Social Security, but it's also a major trend that this deviation from the rules are now being rolled back. So now is the time to be mindful of what happens now.
Okay, thank you very much, Sarah. Then we look at the next situation: employees working in Sweden and living in Denmark and working from home. And Adam, do you have any comments to this?
Yes, I want to make a couple of points. In general, it's basically the same situation as before. When you have a cross-border situation, the work split will be imperative towards managing Social Security. There is a 25% bracket, which can be brought up to 50%. So it's important, where does the employee work? And if the employee works 25 or 50% in the country of residence, that being Denmark, it will trigger Danish Social Security under normal circumstances. Again, there's been this special COVID-19 situation where COVID-19 related changes in work pattern, those have been disregarded. But again, be mindful of what is necessary toward COVID-19 and which work patterns have basically just been applied because it has turned out to be convenient. And again, I would like to highlight this impetus of having the special posting rules applied. The COVID-19 situation has been a trigger for this, and it's a new avenue which we see have been open towards managing commuting between Sweden and Denmark. So this is something which has really blossomed during the situation. I also want to make a small comment on Social Security and rules on the work environment. If you have an employee employed in Sweden under Swedish employment contract, under Swedish Social Security, so it's basically a Swedish setup. When the employee works in Denmark, the Danish rules and standards on work environment apply. So as a Swedish employer, you need to find out what does this trigger in terms of operating a home office. Do you, as a Swedish employer, need to support the setting up of a home office in Denmark, and which Danish standards apply? This is a bit of a maze in that the Danish rules on the work environment apply, so you have to find out which chair does the employee need to have at home and so on. If the employee suffers an injury due to the fact that the home office was not adequately established, then this injury, this accident at work, will be governed by Swedish rules and not by Danish rules. So this is a bit of a maze to operate.
Right, going from incidents to taxes. Now we're going to talk about employees working in Sweden and living in Denmark. For the most part, and that's what my focus is going to be, is the ones covered by the SINK taxation. The SINK taxation is a flat rate tax in Sweden on 25% on your income, regardless of them being covered by Social Security in Sweden, which they, as a main rule, will be. Oh, they will actually be. They're not paying any Social Security themselves on the 25%. So it's a flat rate taxation just on 25%. When they are covered by Swedish taxation, there will be no additional tax in Denmark. The income is exempt from taxation in Denmark. So we have a population of employees paying only 25% in taxes, and that's what they've been used to. However, due to COVID-19, I've seen many SID or employees who then worked from home in Denmark. And since they've been working from home in Denmark, they have not worked more than 50% of their time in Sweden. Consequently, their full income will no longer be taxed in Sweden. They will have to prorata their income. So they will have a prorata part be taxed in Sweden and a prorata part be taxed in Denmark during the 3 months rolling period where they have not fulfilled the requirements of working 50% or more from Sweden. This is, from a tax perspective, quite bad. These ones will suffer quite badly in taxes. It's first and foremost, they will be paying then ordinary Danish taxes, which often, for the most part, is more than 25%. Furthermore, most of these guys have a Swedish registered company car, which they've been used to driving in and out of Denmark, which is completely okay when they have the right forms to do so. But the Swedish car will now be taxed with the Danish tax rules. And as a main rule, you say if you have a company car of 200,000, a value of 200,000 in Sweden, the value for tax purposes in Denmark is double up more or less. It's 400,000. So they will be taxed on a car with a value of 400,000, or if they got a really nice car, it's even more. Again, they will suffer a much higher taxation on that benefit in kind that they were used to paying in taxes on the same benefit in Sweden. Also, many of these employees have a Swedish pension scheme, a changed pension in Sweden, and those pension payments will be, for the most part, considered taxable in Denmark. So they will be taxed on income, which they actually were tax exempt from in Sweden. So they will have a massive Danish tax bill here for 2020. At least I see that on some of my clients. They already done some tax estimates. It's going to be quite bad for these guys. So what I would recommend, again, at least as a minimum, that you, together with your tax advisor, try and communicate that to your employees who you know are working in Sweden covered by the same taxation and living in Denmark. Also, I know our colleagues, at least in Sweden, are doing the same communication. Most likely your advisors, when not using Pricewaterhouse, is doing the same. But I would suggest entering into some kind of dialogue with these employees, maybe together with your advisors, maybe separately with you yourself, just to warn them, because many of them have absolutely no idea that a pro rata part of their income will have to be taxed in Denmark for the income year 2020. It is going to be a big surprise to them, and for those people, it's going to be a bad surprise. But we have Swedish residents, not too bad. The Danish ones, very big, bad tax surprise when doing their tax return for next year. And also they need to know that they need to take action. They need to register their work days. They need to find out how much is actually going to be taxed in Denmark in 2020. And they need to set aside money for the underpayment of tax they will suffer. And hopefully, if they have the money, be able to pay that in before year end in order not to pay interest expenses on the underpayment of tax. So for those guys, there's some work to do, in my opinion, as a minimum. Yeah.
Yes. Thank you, Adam and Christina. Christina, what about, is a Danish company going to have any obligations in this situation where the person is working in Sweden?
No, we have a foreign employer, which these guys have. They will be employed by a Swedish company, and they have no obligations to withhold Danish taxes or report the income to the authorities. That is not an obligation we have for foreign employers in Denmark, regardless of the employees being taxable in Denmark. So it's an employee obligation here.
Okay. Thank you. And let us go to the next topic. Employees who are normally working and living abroad, non-resident, non-tax resident, and now working from Denmark, has come home to Denmark. what is the implication for those? Adam, Christina?
So now we're going to talk about the COVID-19 special tax rules, which were proposed by the Danish government this summer. So let's start with, first and foremost, from a Danish tax perspective, COVID-19 ceased to exist the 30th of June 2020. So all these exemption rules will not exist after the 3rd of June 2020, just to set the scene. But as a main rule, we have assignees who left Denmark when they went on assignment, and the ones we're going to start up with is one where the tax liability to Denmark ceased, or where they became domiciled for tax purposes in another country. So the ones on long-term assignments, more or less, or that's the ones most interesting, where they, as a main rule, will not be taxed in Denmark if they went on vacation to Denmark, if they went on business trips, if it's not a PE, there's some exemptions. But as a main rule, they won't be taxed in Denmark. So we had rules, former rules, the before COVID-19 and the after COVID-19 rules, where first and foremost, if you are a retired person, not so relevant for you as a company, but as a main rule, if you are a retired person, you could come to Denmark for 90 days within a 3 months period, or 3 months within a 6 months period, or up to 180 days within a 12 months period to be in your summer house, not work, just to be in your summer house and not become fully tax liable to Denmark. Then we have like the 10-day rules, which I call the Helle Thorning rule, because that was sort of like imposed in connection with her husband coming into Denmark working, yada, yada, yada. Some of you know it, some of you don't. But then it was sort of like stated that if you have a resident in Denmark and you are working in Denmark, you can work in Denmark up to 10 days per year. That will be acceptable before becoming fully tax liable to Denmark. And then, of course, we have the ones coming into Denmark to work, to actually just work from a Danish office. And if they have a resident available in Denmark, they will become fully tax liable to Denmark. If we move on to the next slide, then in connection with COVID-19 rules there, well, we sort of like looked at, or the Danish authorities sort of like looked at, well, does it make sense to have these rigid rules? Because we have seen people coming into Denmark, staying away from Spain, France, Italy, the US, China, like all these retired people coming into Denmark because they felt safer and it was more nice to be in Denmark during the COVID-19 period, which again, from a tax perspective, started the 9th of March, ended the 30th of June. So these guys, if they've been in Denmark and exceeded their stay in Denmark, due to the stay in Denmark within this period, we can look beyond that. That period simply doesn't count within the 90-day rule. So they are allowed to stay more in Denmark due to this. Then we have some who worked in Denmark. So the 10-day rule was then extended by the authorities to a 30-day rule. So they are actually allowed to work in Denmark for 30 days instead of 10 days. So there's a little bit more wiggle room. If they were in Denmark during this period due to COVID-19, they have 30 days instead of 10 days. So that might work for some of your employees coming into Denmark and working from their summer house or residence they have in Denmark before they become fully tax liable. But then we also have some who just came in, who worked in your office, they had a resident available. Those guys, then there's now a debate going on whether or not we can consider them fully tax liable and be taxed in Denmark on work days in Denmark, or then they have a new rule, the authorities, for that particular period, that you during the period 9th of March until 30th of June can elect to become limited tax liable to Denmark within this period of time if you were in Denmark due to COVID-19. Electing to become limited tax liable to Denmark comes with a cost. The cost is that the income you received during this particular period from 9th of March to 30th of June, or less if you came in later, of course, will be taxable in Denmark. So if you were on vacation in Denmark or you had salary income in Denmark during that particular time and you are in Denmark, your income from that particular period will become taxable in Denmark. That's for some a big cost. So, but you can elect that, and that election will work as a minimum for the employees you've had coming in for countries where we don't have a double taxation treaty. That will be people coming in from France, Spain, Saudi Arabia, some of the oil states. Those guys, they can then elect to become limited tax liable instead of fully tax liable and taxed on their global income due to them coming into Denmark and working in Denmark. So that will work for them, I think. For the other ones, where there is a double taxation treaty, that could be Germany, Sweden, US, China, for the most part, as a minimum, they can elect to become fully tax liable, or they will become fully tax liable, don't elect anything, but still treaty resident in their former host country, China, US. If we can get a certificate from the authorities in that particular country stating that they have been considered treaty resident in China, US, UK during this period of time. I know there's going to be a bit of an issue with China because China will not issue a certificate if they've been in China for less than 183 days. So for the ones in China, we need to be careful. For those guys, it might be better to elect them to become limited tax liable to Denmark, but it is based on an individual evaluation. But you can elect to become limited tax liable. It will work for the ones most likely best for the ones who is from a non-double taxation treaty, and the other ones who are in a double taxation treaty, you need to find out whether or not they can actually receive a certificate from that particular country stating that they are treaty resident in that particular country. And again, bear in mind with China, I'm a little bit also in regards to the US, whether or not that will work. It's sort of like all in the air right now because these are Danish exemption rules, not exemption rules globally. So again, a little bit tricky. Later on, I'll come back to what the OECD comment says about this. But again, it is up to the individual country whether or not they will actually issue such a documentation. So what we should do, what should we do now? In my opinion, try and find out how many of your assignees actually came home to Denmark. And then again, also maybe who came home from, like a Chinese person coming home from Japan, an Australian person coming home from New Zealand. That's also, of course, important. But from this presentation, we're only focusing on Denmark. So find out how many of these assignees came home to Denmark. How many of these assignees do we need to find out whether or not it's better for them to elect being limited tax liable or whether or not they should be fully tax liable to Denmark but use the treaty. And also for the ones where there is no treaty, what should we do about them? So we need to do some kind of set up for these guys, ask them questions, and also ask the host country, what is their opinion about these guys? So there's some work here. And the reason why we need to do some work here and not just wait for tax returns is this: we need to do the limited tax liable election before 1st of May. So there's a clear deadline. We could, by default, just elect 1st of May, that they are all limited tax liable, and do a re-election when we do the tax return 1st of July. But still, action needs to be taken in order to ensure that we actually do the right thing for these particular employees. And that's based on the assumption they actually receive tax return assistance from your advisors. Might not be, but otherwise, if they don't receive tax return assistance from your tax advisors, maybe because they've been out of Danish taxation for several years, everybody's forgot about them, they haven't filed a tax return for 2-3 years. Those guys, they still need to take action this year. They might have to file a tax return this year, so they need to do something where it's sort of like been out of scope for a long time. So I suggest, like, do some sort of setup with your advisors, find out who they are, find out what to do with these guys, because something needs to be done, I think. Yeah. Questions?
What about if you have a person who has been in Denmark for the 9th of March until the 30th of June? Is it possible to split the period so you elect to be a non-tax resident for part of the period and full tax resident for the next of the period?
As I read the rules, no, but you can be non-resident, limited tax liable up until 6th of June, and then fully tax liable for a period of time, and then non-resident again when you leave Denmark again. But during this middle period, as I read the rules right now, it's either elected or not.
What if it's now we have this election period until 30th of June, and our employees are still in Denmark? It's not possible to leave Denmark because we're not allowed to enter the country where we are on assignment.
Yeah.
What is then happening in Denmark?
Well, then there's no election anymore. As of 1st of July, you're still in Denmark, you're working in Denmark, you will become fully tax liable to Denmark, and you will be, if you're from a non-PTA country, you will be taxed on your global income in Denmark. It is what it is.
Okay. Yeah. And what about if you have some share investments and so on?
Yeah, well, if you come globally taxed in Denmark, there will be an entry value on your portfolio of shares if there were an exit taxation. Otherwise, if there were an exit taxation which you postpone, then there will have to be a recalculation of your portfolio of shares. And if you then later on leave Denmark again, and when you will calculate a new exit taxation, a little bit depending on how many years you were actually away from Denmark. So people being tax liable Denmark, that's sort of like an individual thing we need to look at per person. So what the consequences of them are. And actually for some clients right now, for those kind of people, we have a new entry meeting with them and a new, so sort of like they understand the tax situation based on them coming into Denmark and maybe staying here for a long time, because we have clients where they cannot go back to China right now or haven't been able to go back to China the 1st of July, even though COVID-19 seems to exist the 1st of July.
Yeah, also we have a question here, why is it's not prolonged to last longer?
I'm sorry to say I'm not in government. I can't give you a precise answer to that. That's politics.
Yeah.
Yeah.
So perhaps if somebody is contacting the government and say they need to, say the rules need to be prolonged.
It's a bit out of my scope.
Don't you have a connection?
I would love to contact government, but that's like the whole shamu I need to contact then.
I thought you had a connection.
Yeah, no, I don't have direct connection to the Prime Minister, sorry. And I think also, to be honest, this is, if we are talking about politics, it's sort of like you chose to stay in Denmark for a long period of time to enjoy the benefits in Denmark during COVID-19 and onwards. So if you want to enjoy, we have a principle, you also need to contribute. And when you stay a long time, you need to contribute to Denmark, and that also means to pay taxes. So I think maybe this was set up because it was an emergency situation. If you now choose to stay in Denmark for a long period of time, well, to be honest, then most likely the government will say you need to contribute to the Danish state and pay taxes. Okay. So this will not continue for a longer period of time. There's been no say that this will continue, but let's see what happens in fall if it really blossoms up again, the COVID-19. Let's see what happens. But I think spending more money on this and exempting people from taxation will not be an option we can afford.
Okay, so your advice is that we need to start up and looking at this population we have, where have they been under COVID-19, and do we have any exception rules in Denmark or other countries? And we need to do this work before.
As soon as possible. And I would actually recommend, if you haven't been in dialogue with the advisor now, you should do it before fall break. And you haven't heard from them before fall break, because I think it actually needs to be taken and finalized with conclusions before Christmas. Because then we need to find out what to do for tax returns. And I think using fall for that will be a good option for all of you.
Okay. Yes, and that's just in a question here. How does the final calculation of an employee taxes work if we have been running payroll on a Danish payroll system and paid taxes here? Do we then start an application of some sort with the Danish and Swedish tax offices to get the right tax amount paid received on tax?
No, I think if it's on Danish payroll, most likely it's an employee living in Sweden, working in Denmark. Now, I would just use the Nordic aftale, and then the withholding of Danish tax will then be forwarded on to the Swedish authorities in due time to cover the underpayment of taxes in Sweden. So you don't need to do a separate reporting right now for Sweden. Just continue with the Danish reporting and then have somebody assist you with the split for the tax return season. Doing it now might be a little bit too early, I guess. Most likely some of you still have employees working from home, and some of you might still have employees not fulfilling the 6% rule.
Yes. And then another question here. In some of our employees, it were not possible for them to go back as the borders were closed for more than 30 days. Even though our employees wanted to go back, they were not allowed to. Are they going to be treated as tax liable for X days minus 30 days in Denmark, or how is it done?
Yeah, no, not even a minus 30 days. Yes, there will be tax in Denmark. Yeah.
Yeah.
There will.
For all days.
Yeah.
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 So there's no mercy.
No.
Yep.
No. That's a Germany or Sweden or somewhere.
Okay.
Yeah.
That's...
Yeah, staying in Denmark is not a good option always.
But
yeah.
Do we have, when we have other countries than Sweden and so on, do we have any payroll issues we need to correct or make any corrections around if people have come to Denmark and the salaries is run in China or US or something like that?
Now, still, if you have a foreign employer and you're working on behalf of them in Denmark, then they have no obligations to report that income in Denmark as a main rule. So unless they have a PE in Denmark or a branch or something like that, foreign employers never have an obligation to report the income in Denmark if they don't have a permanent establishment or branch in Denmark. So if they came back to Denmark to work for the Danish company during COVID-19, then the Danish company takes over the responsibility for the reporting purposes, and they become an employee of the Danish company. So a little bit depends on who they actually worked for when they were in Denmark working. Was it their assignment country or the Danish company? So it all depends, but if it's the foreign company, there's no reporting obligation as a main rule, unless there's a branch or PE in Denmark.
Okay. Thank you, Christina. Let us look into the next situation.
Yeah.
Employees who normally are working and living abroad, resident in Denmark using Ligningslovens paragraf 33a, now working from home in Denmark. What about this 33a? That's a very nice rule.
Yes, indeed. Right. Okay. Yeah. This is super interesting, actually, because here there was also exemption rules in regards to COVID-19. So as you may know, I'm just going to highlight it anyway, that when covered by the Ligningslovens 33a rules, you have to be on assignment for 6 months, and that's 4 months. You're allowed to be in Denmark for 42 days within that 6-month period. You are not allowed to work in Denmark or have any other second job, but you are allowed to report about your work abroad in Denmark, and you are also allowed to join certain seminars in Denmark to a very limited extent if that seminar actually makes it possible for you to continue your work abroad. So we had lots of employees coming home to Denmark to stay with their family during COVID-19. These guys were there in Denmark for more than 42 days, and they also worked in Denmark. If they are in Denmark from the 9th of March until the 30th of June, due to COVID-19, and they've been working in Denmark during this particular time, that is perfectly acceptable and will not break them using the 33a rule when leaving Denmark again and the period before coming to Denmark. So it's perfectly fine. However, the days they were in Denmark will be taxed in Denmark. We still need to include the income for tax purposes in Denmark because they were working in Denmark and staying in Denmark. However, what we need to be very careful about is that this period of time does not count as a 6-month period. So if you have employees, I put up some examples which you can get later on. I don't want to go through them, but just to show you what is actually gonna happen. But let's say we went on assignment the 1st of January, we were supposed to be on assignment until 1st of July. That will be 6 months, yeah? But we came home in March and we didn't go back on assignment. That particular person will not be able to be on the 33A rule. If the person came into Denmark, out of Denmark 1st of January, came back 1st of August, they were actually 1 month abroad, 2 months in the beginning, 1 month in the end. That particular person would still not be able to be on the 33A rule. You have to be 6 months out of Denmark, 6 months abroad. So the months you are in Denmark, you can take out of the equation. That will not count as 6 months. You have to then add the month in the end of your assignment and in total be abroad for 6 months. I think that's super important. Especially we had employees being on assignment in 1st of November when we did that tax return. Well, we thought, well, you are definitely going to fulfill the requirements to be on the 33A rule. However, they came back in March. They were never away for 6 months. So actually mistakes were done when the tax return was prepared in 2019, and they will not be on the 33A in 2020. And again, if they didn't leave the 1st of July. That's like super important. These rules only, or the exemption rules is only until 30th of June. So if they stay beyond that, most likely then they will not be using the 33A rule until then and start on assignment again, leave like in August or September, whenever they're going to leave. So they will suffer paying Danish taxes. So if they elect to use these exemption rules, they need to know that the income for that particular period will be taxed in Denmark. I think that's the most important message. But also that it's fine that they go back for a few months and end their assignment. Yeah.
Thank you. And we don't have any further questions here. So also, if we pass the 30th of June and we don't leave Denmark, no mercy here on the 30th. So, okay.
And bear in mind, I did not make the rule.
Yeah, that's nice to know. Then we will look at the next topic. What about all the employees covered by the special tax regime? Does it have any implications for those employees?
Yeah. There were also exemption rules for them in connection with COVID-19. Just going to go through them really fast because I think, yeah, no, we have time. Yeah. First and foremost, employees changing work. So we had some who had to resign from their work in this COVID-19 period, and they've had maybe some difficulties finding new jobs. Normally, as you know, there's a 1 month period. So from ending one employment to starting another employment, from a tax perspective, they can be 1 month in Denmark without a job and then still be covered by the expat tax scheme. But here, due to COVID-19, it's actually been perfectly accepted that if you end your employment during 9th of March until 30th of June, that you wait until you get a job until 1st of August at the latest, you can still apply for the expat tax scheme. So I think that's super important. If you employ new persons and they did come in 1st of August, but they were unemployed for a few months, you can still apply for the expat tax scheme. I think that's really important to know. And also, the second rule is that there is a salary requirement for the ones who are not true researchers. The salary requirement during the period of 9th of March until 30th of June were allowed to lower their income for that particular group of people without them not being able to use the expat tax scheme. So if you went into an agreement with all your employees or just these guys, asking them to get a lower salary, that would be perfectly fine and would not jeopardize them using the expat tax scheme. So that's super important to know. It's like the same rules for maternity leave. As you know, they can also for a period of time be having a lower income and still use the expat tax scheme. Same for these guys, they could as well. Had you had to lower their income, so they wouldn't jeopardize their income. So they can still be on the expat tax scheme, which is good to know, but maybe a little bit too late because we are past the 30th of June. Then we got the 30-day rule. As you might know, if you are working for a PE in Denmark and then traveling to the headquarter, and the days working in the headquarter would, if you are a tax resident in Denmark, would be considered taxable in that particular country. And you are allowed to work up to 30 days per year for the headquarter in that particular country when that income is to be taxed in that particular country, but that is a maximum of 30 days. However, due to COVID-19, what one has during the period again, 9th of March to 30th of June, you've been allowed to work more in that country, because that can actually be for, you could have been, some has actually been trapped in that particular country. So they couldn't go back to Denmark, so they were actually there for more than 30 days. They couldn't leave the US, or they couldn't leave China or Singapore. So those guys, they have been, for that particular time, been allowed to work more than 30 days within this year if the extra work days were in that period of time. So they won't lose out on the expat tax scheme. It's a very, very small detailed rules used by only some of you guys, but it's nice to know for those of you who are actually using that rule that there was a possibility here. And then finally, as you know, we have commuters coming into Denmark. They are often limited tax, non-resident to Denmark, limited tax liable to Denmark, work tax in Denmark only on work days in Denmark. So, but they're still on the expat tax scheme if the contract matches the expectations of the authorities for that. Those people have most likely not been able to travel into Denmark for a period of time from maybe March, maybe April, June. In these months where they have not been able to travel into Denmark, it is possible for you guys to pause it, as you know, as you've been used to, because they have not had the 1 to 2 work days in Denmark for a particular month. So normally you guys would pause the 38E and then reapply when they come back to Denmark and work, not to use some of the 84 months. However, this time the authorities say, well, it's perfectly fine that they haven't had any work days in Denmark during this time. You don't have to reapply. You just, the cost is that you're using some of the months, aren't you? Because they didn't come into Denmark, they didn't work, so they weren't on the expat tax scheme. If it's like 3 months, you could actually add the 3 months in the end of their assignment or employment, instead of you're now using up the 3 months. The employees you would want to do this for is the employees who might have a second job in Denmark or has a border of directive fee where they have also income tax on the ordinary tax scheme. If you cease them on the expat tax scheme and need to reapply for these guys, then their application will not be approved by the authorities because they've had income tax on the ordinary income. So those you also need always to be careful pausing their 48E. And for that COVID-19 period, it is now allowed not to pause it. So it's an option you have. The cost of doing it is you spend of the 84 months. Any question?
Yeah. What about if you around the special tax regime and you have a period after the 1st of July where you're still not in Denmark? So in August and September you're not in Denmark, and you have a board fee from a Danish employer.
Yeah, then you are in trouble. Actually,
okay.
Then you because the rule is that you have to be limited tax liable to Denmark to use it. You are to some extent, but not on the expat tax scheme. So most likely you should have paused it and then reapplied, but you can't. So what most do is they continue, even though they actually don't have income to be taxed under that. So they still have a limited tax liability to Denmark due to the border directive fee. And for sure, none of them you should pause the application, because then they can't come back on the expat tax scheme because they have ordinary income to be taxed. So pausing employees' liability for taxes on the expat tax scheme is something you really have to look into detail to, and just not do by default for these employees.
No, but do we have a choice if it's after the 1st of July and you're not being in Denmark for 2 months and the employee's not in Denmark?
No.
we have a risk that the Danish tax authorities come and say, okay, you have 2 months here, you've not been in Denmark, your tax liability ends.
Yeah.
Then we need to make a new application for a special tax regime the 1st of October. And then we need to look into all the conditions. And then we can see, oops, you actually have a port fee from a Danish company. So the conditions for rejoining the special tax regime is not fulfilled.
Yeah. So it's super important to enter into dialogue with these employees who are not willing to come to Denmark, or you find they shouldn't come to Denmark. You need to understand the consequences of them not coming back to Denmark and work. Furthermore, as many of you have experienced, the Danish authorities' interpretation of the contracts used for applying for the expat tax scheme has changed a bit throughout the last couple of years. So where you previously had contracts which would go through an application process and be approved for the expat tax scheme might not be the case anymore. So even also you resending in a contract and reapplying on that particular contract might not be able for you to actually get it approved. So again, be careful about this and seek advice for the ones actually normally assisting you, just to make sure when you reapply that they actually will be approved also for the expat tax scheme, or whether or not you need to take action there as well.
I think we will take the next topic around OECD comments and the Danish styresignaal.
Yeah, okay, let's make that one really fast then. So there's time just for some follow-up questions. So both the Danish styresignaal and it looks strange on the screen, guys, and the OECD comments, first and foremost, in regards to permanent establishment, there's been some comment from the OECD whether or not working from home would establish PE for a particular company. And they've reported back, and the Danish authorities agree, that it will not risk PE that you work from home for a particular time during the COVID-19 period. And here the COVID-19 period most likely is longer than stated by the Danish government in the exemption law we just went through. However, if construction on a construction site is stopped due to COVID-19, where there's normally a 12-month period, that period of time where the construction was stopped will not be exempted from the 12-month period. So if you stop construction for 3 months, it will still be in the 12-month count. So there's an exemption, or actually no exemption, for construction in regards to COVID-19. And they've discussed a little bit about effective place management, whether or not that will change if we had like a CEO working from home due to COVID-19 or couldn't come back to Denmark because they're commuting. As a main rule, the OECD states that most likely that will not change the effective management. The Danish authorities say, well, it has to be based on a detailed interpretation of that particular, or go through by that particular person's work in that particular country. So there's nothing really certain here, but one should say as a main rule, it will not change the place of effective management, I believe. Then the commuters, so I think this is super important for you guys to be aware of. If we send people home, and that should be part of your dialogue with your advisors, so we would then say that the income would most likely change to be taxed in the home country because they're now living in home and working from home. However, if we send people home on subsidized income, lønkompensation, that income will still be taxed in the country where this subsidization was coming from. So when you talk to your advisors, also you need to do some sort of tell them as a minimum that you send people home on subsidized income, or whether or not you just pay the full remuneration without getting any subsidization from the Danish authorities or any other authorities in the world, because the rules is going to be totally the same globally here when they've signed the OECD rules. And then in regards to treaty residents, it's sort of been clearly stated both by the Danish authorities, but also here that you being in a place for a longer period of time will not change where you are considered tax treaty resident. It doesn't really match with the rules we just went through, but that is the comments to the OECD actually, that you will not change tax residency, but Denmark will still tax your global income to some extent. But still, we will consider you being treaty resident in China, for instance, but China will not sign it. So this is super strange, and that's going to be really funny to work with later on from a tax perspective when we do the tax returns. But that's the comments. I have not been made aware of any countries who has not agreed on this yet, but also please note that just comments from the OECD is not a law. It's just a comment. We can't really use it for much. Yeah, I think that's it from my side.
Very good.
One final slide, we go in on the Pricewaterhouse website and see what every country has done in connection to COVID-19. There's going to be a link in the end of this presentation, so you can read about India, New Zealand, Australia from a personal tax perspective, Social Security, and also corporate tax and VAT. You can read about every country. This is a nice publication, which is updated all the time.
Yes, and we need to close down. Thank you very much for all the questions you have sent in. And as we are going to send out the presentation to you, and there is going to be a questionnaire as well about the webinar. And thank you very much for joining, and be safe out there.